Guys, in the last video, I explained to you that Meta is super cheap at under $140 per share. However, I did explain that it's not super cheap. In other words, less than 50% of its intrinsic value, which I've calculated at approximately $230 per share. Meta is a stock that I hope to open a position in this week, and so that's what I'm going to dive into in this video. So guys, first, let me run the intro. What's up, guys, and welcome back to the channel. And let's dive right into this one. But the first thing I do gotta say is that although I am explaining to you what I'm gonna be looking to do in this environment, it's never investment advice on this channel. I've been investing for a long time, but I still make mistakes. So I always want you guys to manage your portfolios prudently. And if you're not sure, if you're new, find an investment advisor. But let's dive right into this one. So you can see that on Friday of this past week, Meta actually declined down to under $140 per share intraday, and then it closed up a little bit at approximately $140.41. And so in the last video, I did explain to you guys why Meta is crashing and if it's cheap enough to buy right now. And of course, Cole's notes to that is that I'm valuing the company at approximately $230 per share. It's trading at approximately $140 per share. I would love to get this name sub $100 per share. That might be a pipe dream, but there's other opportunities for me in this environment. And that's exactly what I'm going to explain in this video. But before I go into that explanation, I did want to point out two comments that I thought were very funny and important. So the first one came from Mark, by the way, I guess. Mark BTW, by the way. Quest has 15 million units sold versus the PS5 with 21 million units. Both of these systems were released in Q3 of 2020. Quest is the PlayStation of the VR gaming space. So as this market grows, Meta is the best option. This is huge regardless of the metaverse, in my opinion. And Mark, I think that's a huge point. Like, we never thought of Meta as a gaming hardware company. We almost overlooked that. But this is a growing segment of the business. And I always said, I don't want a home computer. And so if you can like move away just a little bit or just diversify out just from not only being a gaming hardware company, but also how cool would it be if I could work on my computer through a headset? So for example, if I'm on an airplane or if I'm sitting on a bus or like I'm just sitting on the couch and I don't want to be in my office, I can just put on my headset and in front of me is everything that I see already, but there just happens to be a TV or a computer screen in front of me, and I can like use my mouse digitally or whatever and make any edits. It would be really cool if I could edit these YouTube videos sitting on the couch, not in the office. And so I don't know if that ever will happen, but even if that doesn't happen, the fact that Mark made a great point that it is next-gen gaming is a huge issue, because it sounds to me like PlayStation never really got really far in that space. I know they did try, and I don't think it like worked out for them. Guys, let me know in the comments what happened there. But you know what? The Oculus Rift has been a great product, and it's only getting better. Now, Jamie said that although Mark Zuckerberg is not the most likable CEO, his track record speaks for itself, and I do agree with Jamie on that point. And it's a very strong business with a great balance sheet and underrated management. And I do believe that because of all the heat that Facebook takes, their management is underrated for the way that they've navigated this environment. And Carl said that the stock will probably go lower still because the market consists of jacked up crack cocaine addicts having a seizure at every new headline that comes out, and those lunatics are scared right now. That is the single greatest way to describe Mr. Market. Okay, let's get into this video, guys. So like I said, I'm valuing Meta at approximately $230 per share. That reflects 62% of its intrinsic value, and it's currently trading at around 14 times earnings per share. And like I said, I would love to own it under $100 per share. I don't know if I'll get that, but even if I get close to $100 per share, that sounds great to me. Now, look, guys, there's two ways to bring down the cost basis. The first way is to sell cash secured puts. I've talked about those a lot on this channel. Something that I haven't covered a lot on this channel is selling covered calls. But I do want to make a note here that over the long run, you're going to make much more money and pay less taxes with just buying stocks cheap and holding them. So if you're not comfortable with stock options, don't feel like you need to use them. Now, the first stock options that I want to talk about, you can see in the top left that I've highlighted, it says Meta 240119P. The P means put option. The 240119 means that this is the January 19, 2024 cash secured put. So that's what we're looking at here. And so if you look down at the $110 cash secured puts, if we sell these cash secured puts at around $13 per share, it'll provide us with an 8.9% annualized yield. I generally like to look at cash secured put yields at least above 17.5%. So that's not good enough for me. And then when we look at the $120 cash secured puts, it gives us around a 10.7% annualized yield. Now, if you sell that $120 cash secured put and you get that $17 per share premium, your net purchase price is around $103. So, I mean, you could make an argument here that you're getting 10% annualized yield, and worst case scenario, if you're exercised on the stock, your net purchase price is $103. The point that I would make is that because the time to get exercise is so long, you do have to put aside that capital. And so that capital should earn a substantial return on it. And 10.7% is not the hurdle rate that I'm looking for to put aside capital. So for me, those two cash secured put opportunities are not sufficient for me. Now, looking at this opportunity, this is, you can see I've highlighted the Meta 240119C. So the 240119C means this is the January 19, 2024 call options. And so you can actually sell the $150 call option, so effectively a covered call, which means that you buy the stock and then you sell a call option on it. The $150 covered call would give you a 16% premium yield annualized, and if you're exercised, you will get a 21.3% annualized return. And you effectively get a wonderful $120 per share cost basis. So effectively what's happening here is you're getting the premium right away. So that's just your return automatically. And that premium is around $30 per share. So you pay $150 for the stock, you sell that cash secured put, you immediately get that $30 per share. You can consider that a premium, like an annualized return, or you can sort of consider that as a net purchase price. So on a net basis, you bought the stock for $120. So however you want to look at it. But if the share price runs and it runs above $150 per share, well, you will get exercised on it. And so the difference between the price you buy the stock at, i.e. $140 per share, and the price that you get exercised on, $150 per share, you capture that sort of spread, you add that to your premium that you got for selling the cash secured put, and that's how you get your 21.3% annualized return. Obviously, if we knew for sure that the stock was going to run by January of 2024, the best option would be just to buy it at $140 per share and just wait for it to run. So there's no right or wrong answer, but this just comes down to one of those situations where worst case scenario, I generated a 16% return on it, and best case scenario, I generate 21% return on it. And like, if we really want to think about it, if you just want to look at it from a cost-based perspective, like really, really worst case scenario, I got a cost base on this stock of $120 per share. So there's no real bad scenario here from my perspective. That's generally the opportunity that I'm going to go after. But I do want to show you the other covered call just to show you guys the relationship. So you can see at the bottom there, the $200 covered call. The higher you go up on the exercise price, the lower your annualized premium yield would be. But for some of you guys, this might actually be interesting because you buy the stock at $140 per share, you sell the $200 per share cash secured put, and if the stock does not go beyond $200 per share by January 19 of 2024, you do not get exercise, so you make a free 8%. But if it does go beyond $200 per share, you obviously capture the gain from 140 to 200. So your annualized return would be 40%. So this is one of those opportunities where you buy the stock at $140 per share and you're able to bring your cost basis down by $15 per share. Now, I just realized that I made a mistake in the top one. Your cost basis isn't actually $120 per share. Your cost basis would be $140 per share, which is what you bought the stock at, minus the $30 per share premium. So that first covered call that I discussed, your net purchase price is not $120 per share, it's actually $110 per share. So it's the $140 less the $30 premium. Now you can see here that the 2025 covered calls are available as well. This is the January 17, 2025 call options. So the $150 call option gives you a 12.3% annualized premium yield and a 15.2% return if you're exercised. And the $200 covered call option would give you an 8% annualized premium yield and a 26.3% return if you're exercised. I'm just not interested in any one of those. Of course, the one that I really like is the $150 covered call, where you get a $30 per share premium. And so you buy the stock at $140 per share, you get that $30 premium. Your net purchase price is $110, which effectively reflects a 16% premium yield. And of course, worst case scenario, if you're exercised on it, you make a 21% return overall. Now, none of these opportunities might be the best for your personal portfolio or scenario that you're in. So I want to know from you guys, what is the way that you're playing this? Now, you could actually double up option scenarios. Like, for example, you can sell a near-term covered call and buy an out-of-the-money call option as well. So you get sort of like the optionality if the stock runs, but you also get a somewhat lower cost base as well. So if you guys are doubling up on your stock options, I'd like to hear about that in the comments below as well. Now, what is Wall Street really thinking about this? Well, you can see that Wall Street is very bullish on Meta right now, and I actually think that they get more bullish. I think some of those holds turn into buy as the weeks go on. And what is Wall Street's price target? Well, you can see that Wall Street, by just sheer luck, their average share price 1 year out is very close to mine. Mine came at around 226. I round up to 230. Theirs comes in at around $222 per share. I round that down to around $220 per share. So Wall Street is very bullish considering that the current share price is $140 per share. And using the analyst EPS estimates, you can see that as time goes on, using a cost basis of $110 per share, your yield by December of 2027, if Facebook or Meta generates $16.76, is effectively 15%. So it's not like if you get exercised on the security, you're not making money. You have effectively purchased it at a cost basis, which reflects a 15% annualized yield 5 years out. And so it's a very opportunistic opportunity in this environment. And so that's why I'm very interested in Meta. I do believe that they have a moat. I do believe Meta is a great way to advertise in an actionable way. I've actually been a consumer of certain things that I have seen on Meta, and so I understand that it works. And so I believe in the business, and this is something that I'm gonna once again invest in. I mean, you guys might have known earlier on in the life of this channel that I was a buyer of Meta. It got a little bit too hot for me, so I sold. Thank goodness that I did, but I'm looking to enter into it once again. But I agree with some of the commentators before. I do believe that people are having a bit of a seizure right now, and the stock could go lower. And so I'm well flushed in cash. I've been in cash for a long time, or at least a big part of my portfolio has been in cash. So I'll be buying more as it comes down as well, and dollar cost average this thing all the way sub $100 per share. Just like I kind of started dollar cost averaging Alibaba down as well. Now, the one thing that I do got to remind you guys is that approximately 80% of the watch time on this channel is from people that are not subscribed. So if you have an opportunity, guys, please consider subscribing to the channel. And once again, if you missed it, here's my valuation for Meta. It's trading at approximately $140 per share. I'm valuing it at approximately $230 per share, which reflects approximately 60% of the intrinsic value. Now, I've actually valued Meta in 3 different ways. And so how do you get access to that model? Well, you can get access to that model at the lower tier of the Patreon. And if you want to join us for an epic live presentation, you can join us at the upper tier of the Patreon. Now, if you missed that first video that I did put out on Meta in this 2-part series, you can actually get to that first video right here.